Hi, Jordan. Thank you very much for joining us today. Skyharbour Resources is a uranium exploration company focused on the Athabasca Basin. You have an extensive portfolio of assets. Why don't you take us through the highlights of this portfolio of assets?
Yeah, well, firstly, thank you for having me. Excited to be presenting the Skyharbour story and talking with you, Jimmy. It was good seeing you at the WNA a few weeks ago as well. So Skyharbour Resources, for those that are unfamiliar with the company, is a leading and high-grade uranium exploration and prospect generator company. We've got 24 projects scattered throughout the Athabasca Basin of northern Saskatchewan, representing one of the largest mineral tenure holdings of any company in the region. The Athabasca Basin is the highest grade depository of uranium in the world, consistently ranked as a top mining district by the Fraser Institute globally as well. Built this project portfolio up over the last 10 years. So we were there in 2013, 2014, 2015. Obviously, the market was a lot more challenging then, but we were there with our contrarian view. And we were opportunistic in acquiring projects, and we've continued to be aggressive in our acquisitions, including recently acquiring projects from Rio Tinto and Denison and additional staking that's built up this project portfolio to well over 1.2 million acres across those 24 projects. Now, these projects do range from earlier stage, more grassroots exploration properties right through to more advanced stage exploration assets that either host small uranium resources and or have high grade uranium showings in mineralized zones in historical drilling. Our two most advanced stage projects are two co-flagship projects, the Russell Lake and Moore Lake projects we're actively advancing. And then the other 22 or so projects are a part of our prospect generator business, whereby we look to bring in partner companies to farm these projects out and have these partner companies advance these projects while we collect cash and stock on an annual basis from these companies. So it's a unique dual-pronged strategy that we employ at Skyharbour, where we're focused on high-grade uranium discoveries at our main projects. We're funding the work at those projects while we have partner companies fund the work at our secondary and tertiary projects as a part of our prospect generator business. So we've really built the company up to be a one-stop shop, if you will, for diversified uranium exploration exposure throughout the Athabasca Basin.
Jordan, as you mentioned, Skyharbour has 24 projects, and the two most advanced projects are Russell Lake and Moore Lake. And I want to start with Russell Lake. You and your team have been very busy this past summer drilling out the property. Maybe you can just take us through your drilling program. How many rigs, how many meters?
Absolutely. And just to start off, this project, Russell Lake, for some of those that have been following the story will know we acquired this project from Rio Tinto in an option agreement that we signed a year ago. So we're earning in up to 100% at the project. It's a very strategic asset for Skyharbour, as it is adjacent to our existing flagship project, Moore Lake. And collectively, these two projects represent over 105,000 hectares of property in very much prime real estate in the eastern Athabasca Basin, just south of the McArthur River mine, just northeast of the Key Lake Mill, and just west adjacent to Denison's flagship Wheeler River project. Now, there is a road that runs up through Russell Lake that services the McArthur River mine, power lines alongside that road, and we are also acquiring an exploration camp that Rio established on the Russell Lake project, which brings our exploration and drilling costs down. So it was a strategic acquisition for us. We spent the first little while getting the permits. We signed an exploration agreement with the English River First Nation. And we started drilling this project as our first inaugural drill program since acquiring it from Rio, and really since Rio drilled it previously, almost 8 years ago, actually. It's the first program, and we started it earlier this year, and we're just wrapping it up. It's a 10,000 meter multi-phased drill program. So we do have assays pending from this program. We're very pleased with what we've seen. In fact, we've already started planning a winter follow-up program that'll likely be 4,000 to 5,000 meters of drilling in the winter to follow up on some of the higher priority targets at the project, including what's called the Grayling Zone, a group of conductors that trend from Denison's Wheeler River project onto the Russell Lake project and close in proximity to the infrastructure at Russell Lake, so easy to get to. And then also another target area we drilled a little bit at in this program was called the Fox Lake Trail target area on the northern part of the project, which again included extensions in the continuation of uraniferous conductive corridors from Denison's Wheeler River project. There's no lack of targets on this property. There's tens of kilometers of highly prospective EM conductors that have yet to be systematically drill tested. And we're confident that we can deliver a new discovery at this project going forward.
And you mentioned that Rio Tinto is a partner on this project. How do you see this partnership evolving?
Yeah, it's a great question, and it took us a little while to negotiate the terms of the earn-in at the project. But as I mentioned earlier, we structured it in such a way where it's a staged earn-in over the course of the next several years. We can earn an initial 51% at the project. We're nearing completion of that. In fact, this upcoming drill program should get us over the finish line there, whereby we will have earned the initial 51% at the project. At that point, we can elect to carry on as a 51-49 JV partner with Rio Tinto, or we can continue earning in an additional 19% to get us to 70%, and there would be a share issuance and additional exploration expenditures required for us to do that. And then at that point, we do have an option to make a balloon payment at the end of the day to buy out Rio 100%. And in order to do that, we would be issuing fairly substantial number of shares. So Rio, in that case, even though they would not be a joint venture partner at the project, would become one of our largest, if not our largest shareholders. So Rio does have a vested interest in the project, and needless to say, is one of the largest diversified mining companies in the world, a great partner to have.
So that's a good overview of Russell Lake. Let's move on and discuss Moore Lake. It's the most advanced project, and you are working on a mineral resource. You've done extensive drilling on this property in the past years. Why don't you just take us through that?
Sure. So we are working towards releasing a mineral resource estimate likely later this year or early in the new year. As you mentioned, we've carried out a fair bit of exploration and drilling on this project since we acquired it in 2016, and we carried out an initial drill program on it in 2017. Now, there has been a fair bit of historical exploration at the project. In fact, our geological team worked on this project in the late 90s and early 2000s, made the initial high-grade discovery there at what's called the Maverick Zone. And we went back in there in 2017 and 2018 and followed up on that. And we're successful in intersecting some of the highest grade mineralization discovered at the project, including a drill hole that returned 21% U3O8 over 1.5 meters. That was within 6% U3O8 over 6 meters at the main Maverick Zone. We continued drilling this project through the last 5 to 6 years, and we've continued to delineate high-grade zones of mineralization. In fact, just 2 years ago, we started focusing more on the underlying basement rocks at this project, and we intersected our highest grade basement zone of mineralization, which included a zone of 6.8% U3O8 over 2 meters. This Maverick corridor that's host to these several high grade lenses, which is what we're working on the resource estimate for, is open at depth, and it's really only been systematically drill tested. Of the 4.5 to 5 kilometer long corridor, only about 3 kilometers of that has been systematically drill tested. The other great thing too is the mineralization at the Maverick corridor is relatively shallow. The unconformity is only at about 260 to 270 meters. So most of that high grade that's hosted at the unconformity or in the sandstone is relatively shallow. But we believe there's a lot of exploration and discovery upside potential remaining in the underlying basement rocks, which haven't been thoroughly drill tested. And there are other targets on the project, about a dozen or so other regional targets that have had some sporadic drilling, have mineralization in previous drilling, but there hasn't been much follow-up work. So we do have plans, along with the continued drilling and exploration at Russell Lake, in 2024. We do have plans to continue drilling at Moore Lake as well. In fact, we can carry out those programs simultaneously as the projects are adjacent, so we can move the rig over from one project to the other relatively easily.
So that's a great overview of your two advanced assets, Russell Lake and Moore Lake. Another unique feature of Skyharbour Resources is the project generator business. Can you just provide us an overview of this business and how it works and how it benefits Skyharbour Resources?
Sure. So in addition to the high-grade uranium exploration and discovery process at our main projects and resource delineation as well, we do also employ what's called prospect generation, a strategy that I think most investors in the space are well aware of. And this has been a part of our business that's very much kind of evolved over the last several years in particular. So with 24 projects and us very much just being focused on 2 or 3 of those at any given time, instead of letting these other assets sit there and collect dust, we've been very active with looking to bring in partner companies that can then earn in through an option agreement and ultimately work towards a joint venture partnership, but bring in partner companies to advance these secondary and tertiary projects. So of those other 22 projects, we've signed 8 separate option agreements with 8 other partner companies over 9 of those 22 projects. 2 of those 8 option agreements are now joint ventures, one with Orano, France's largest uranium mining and nuclear fuel cycle company. They have a 51% stake in the Preston project. We retain a minority interest in that project. We are expecting some additional exploration in the new year at that property. And then the other joint venture we have is with a company called Azincourt Energy at our East Preston project, whereby they've earned a majority interest in that project. Now, the other 6 option partners are still earning in, so they're still having to make cash and share payments annually and fund 100% of the exploration at these projects annually. And it's been a great complement to us focusing in at our main projects, Russell and Moore, and again, having these partners, the partner companies come in and fund the work at these other properties. It provides a lot of additional news flow, and most importantly, it provides our shareholders with exposure to several other projects that are being actively advanced by other partner companies. So you can think about it as having multiple irons in the fire, and it provides this optionality value that is unique to Skyharbour.
And Falcon Point is another advanced stage exploration project in the portfolio that has now been split up and optioned out to several different option holders. Can you just talk about this asset?
Yeah, so this is a good example of the prospect generator business in action, where we acquired this asset back in 2014 at a very attractive price and valuation, and subsequently we've now optioned 3 different parts of the project off to 3 different partner companies. The northern part of the project we optioned to an ASX listed company called Bloor Resources. They're nearing completion of that option agreement, having spent money in the field and having made cash and share payments to Skyharbour over the course of the last several years. That project is now called Hook Lake. And we are expecting that they'll continue advancing that project, likely as a joint venture partnership after 2024. And then the bottom half of the project, we've split up into 2 separate projects and optioned each of them off. Our South Falcon East part of the project, which is host to a small, shallow uranium mineral resource that is not huge, it's not high grade, but as the uranium price continues to move higher, it does get more exciting, and probably even more exciting from an exploration standpoint is the potential to expand on this inferred resource and continue to drill a little bit deeper as it's right at surface and look for higher grade zones. In fact, we carried out some drilling in 2015 at this project and did discover that the tenor, the grade of mineralization does pick up at depth. Now we optioned this project off to a company called Tisdale Energy. We are expecting that they'll be completing some exploration and drilling in the new year, in addition to making the annual cash and share payments. So we're excited for them to get to work there. And then more recently, just several months ago, we optioned out the final part of this project called the South Falcon project to a company called North Shore Energy. Again, we are expecting that they will be completing some exploration and potentially drilling it in the new year as well. And when you add up the combined project consideration of all three of these option agreements on that Falcon Point, the original Falcon Point project, it's tens of millions that would be coming in cash, stock, and in exploration funded by the partner company. So it just goes to show the value that you can realize on these projects as the market improves and as you find the right partners to come in. And just a note on that, in getting back to the previous discussion of the entire prospect generator business. So of those 8 option agreements that we've signed, again, 2 of them have gone through to completion. Assuming that the remaining 6 are completed, that will represent well over 85 million in combined project consideration. So that's exploration expenditures funded by the partner companies, that's cash payments coming into Skyharbour, and that's share issuances coming into Skyharbour as well. Now that's assuming that all these companies fully complete their earn-ins. But even if we get a fraction of that amount, it's a significant amount of money, stock, and funding coming in that us and our shareholders will benefit from.
And because you're talking about the cash element of the project generator model, why don't we just jump right into your balance sheet? Cash is the lifeblood of any exploration company. How much cash do you have on hand, and how will you allocate that in the coming year?
Sure. So we're well funded with about 4.5 million in the treasury. We, as I pointed out earlier, receive cash payments and share issuances on a fairly regular basis throughout the year from these various partner companies. So we are expecting another $1 million+ in cash and stock to come in before year end. And over the next 24 months, again, assuming that all the partner companies complete their respective earnings, we could receive upwards of 10 million in cash and stock from these various partner companies. And that's assuming that we sign no more additional option agreements. We are in advanced negotiations on several of the dozen or so other projects that we own 100% of in our project portfolio. I expect we should be able to announce new partnerships and option and JV agreements in the next year or so. But yeah, that's assuming the status quo, and so that would fund the lion's share of the exploration that we're planning, G&A, additional acquisition. So it's a good way to mitigate equity dilution as well.
Jordan, as we wrap up, what can investors expect in terms of news flow from Skyharbour Resources in the coming months?
We're going to have a very busy 6 to 12 months ahead of us. Imminently, we are expecting news flow on the drill results from Russell Lake, this initial 10,000 meter drill program, and following up on that news on a winter program that's already being planned at Russell Lake. We are planning to continue drilling right through the new year at Russell Lake, fully permitted for that and funded for that as well. And as I mentioned, we are also expecting additional drilling at Moore Lake on the back of a mineral resource estimate. So lots going on with the 2 main projects. As far as the partner companies go, we are expecting work programs from our 2 joint venture partners, Orano and Azincourt. We'll have news out on that in the coming weeks and months. And of the 6 option partners, I'm expecting at least 3, maybe 4 of them to be carrying out exploration and or drill programs in the coming 6 to 12 months. Again, they have to fund all of that. So a lot of news flow, a number of irons in the fire, and really what we're trying to do is offer as much exposure to multiple potential new discoveries in the Athabasca Basin across several different projects.
Well, Jordan, that was a great overview and a great update on Skyharbour Resources, and I look forward to our next update.
Thank you very much for having me, Jimmy.